Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnny Market. You all know that drill. Hit that like button and subscribe if you already haven't. Yeah, let's get into today's news and video. Obviously, the stock market taking a massive uh, dump. As I'm speaking, it's 529. Uh, the Dow's down over 400 points. S&P down 39 points, over 39. Nasdaq's down, and gold is also down. Everything's down today. Gold is down. I mean, when the Fed said higher for longer and looking at the data, gold is down. Can't really see. Kiko doesn't update. I'm just gonna see what GLD says. I don't know why they don't have one for before, during trading, and one for after hours. The GLD down 0.93%, so still less than the stock market. That's down 1.06%, the Dow, but S&P declined less at 0.74. So as I'm looking at this, but anyway, going back, if you went to my last video, the last 2 or 3 days, very bearish. The Fed's talked about higher for longer. Inflation's coming out, and my last video, I said this is a new turn of events. Because I'm a fundamental analyst. That's what I do. I identify the actual fundamentals, meaning like what makes it trade, not what. Like I heard I got the dumbest message from someone. This isn't anyone pertaining to this channel or comment, just someone in my private life saying that demand from Asia countries is driving up the price. That does not matter. It never has. And during the last bull market from 2000 to 2009, China was net sellers of gold. And show what charlatans these people are. All you hear about is China and India. But if you actually look at this, let me see if I can share my screen. I'm going to try to do this. Uh, and share. Let's see if you can see this. Right now, the National Bank of Poland brought 130 tons of gold between April and November 2023, increasing its gold holdings by 57%. This was the highest level of annual buying from the National Bank of Poland on record, second to only China's bank. When they talk about demand, how come they never talk about Poland? They buy more than India. You saw it right there, only China. So, and I know that because I have family in Eastern Europe, but Poland buys it a lot. You never hear them. They just have stupid theories, and that's what they are. So anyway, stop sharing my screen there. Just giving you an example. We'll see if that works. New feature I want to add to my videos so I can actually do cool stuff. Anyway, let's get into the news. The economic data. This is what drives the market, right? Right. Yes, is it fake? But is it? And if you look at it, Tuesday home Schiller price, that was 7.4%. Housing price index, that's going. CB consumer confidence, that's higher than normal. Let's look at Richmond Fed, that beat expectations. Dallas service index was declining, and Dallas manufacturing was down 19.4%. So you can see that the economic data still mixed, but some came in like the Richmond one, better than expected. Home prices were good. Now they don't view that as inflation; they view that as good because they view the normies and the strangely normal people. Because if you're normal in this environment, meaning you accept the mainstream theory and think everything is normal, today, then you are strange if you think modern day is normal. So the strangely normal, the normally strange, whatever you want to call it, the strangely normal people or normies, they viewed it as probably mixed data. And the real data comes Friday. That is the PCE. GDP comes out tomorrow, but the PCE, and that will determine the worst case scenario for gold is, I would say, lower inflation and strong economic data. That will justify the Fed only cutting two rates. And that will be and I think that's why I think gold, it might go to 25 or 2,600 because I think when it cuts rates, it's going to go up more. And then if that's the case, inflation's able to stay low for a while, then it will be time to sell and this run will peter out. And it could be another 3 years. However, I don't think that's going to happen. I think inflation's sort of out of there's constant selling pressure now, as you went in, previous videos you can follow on this channel. Constant selling pressure, constant selling from the strategic reserves at this summer. That's going to end, and as you know, lower prices, higher demand, and higher for longer. This is still high, so I think regardless, there will be a recession. Now, what I do hope happens is that if inflation gets lower, the economic data gets worse. I'm already banking that inflation, CPI, PPI, and everything is going to be a lower print. They're doing everything they can. They took coffee out of the CPI. So it's probably going to be showed up. The prints are going to be lower. Doesn't mean what you pay is going to be lower, but they're just going to use whatever tricks they are, and it's going to be lower. And I do think that will stoke inflation, the lower rates, and then I think that's will be the next upswing in gold. But silver, today's movement, 529, 2024, exactly shows what I'm saying. A lot of chartists were talking about silver's breakout, big breakout. I see a lot of silver to 50, and it was up today for the most part, and then it finished in the red. It finished in the red today. So let me see if I can get Google Finance, everything. I can't stand how they do after hours on. I wish there was a better I wish there was a better one that would show the price, till 4 during trading hours, and then it would show after hours. So I can't let me see SLV. Yeah, silver SLV was down 0.24%, and it was up until it was going up until what time? About 2 o'clock, 2:20, 2:30. And the reason why is the fundamentals are still pulled higher for longer, higher interest rates for longer, and lower inflation rates. So anyway, this is how I see it. The worst case scenario is if this GDP and these economic numbers come in strong while the inflation goes lower, they're going to cut rates. Gold will go sideways to down, just like it is. And then when they cut rates, it's going to go up. And then, and if the economic data is still strong, then I think the gold bull run will, peter out. But I don't expect that to happen. I think when they cut rates, that's going to spur inflation, and that will, to my original thesis, which I still maintain, cut rates, spur inflation, then they're going to fight it. They're going to get cocky, uh, raise rates even more, and I think some of the crash will come because you're seeing a lot of. If you look at all these conference calls, you can tell business is hurting. Salesforce. Let me see if I can do another cool share screen. I've done one. Let's see if I can do it. I will see if I can share it. right here, Salesforce lifted its earning. The company now expects adjusted earnings of 9.86 to 9.94, compared with 9.68 to 9.76. Its revenue guidance remains analyst pulled, but Salesforce financial chief says expects deal compression, slowing projects and professional services business throughout the fiscal year. So if you look at it, let's go look at Salesforce plunges 17%, first revenue miss since 2006. So as you can tell, the companies are not doing as well. And they even said expect, there was some good stuff, but they said expects deal compression, slowing projects. That can't be good. Soft guidance, and right here tumbled on revenue miss and soft guidance. And I've went into Starbucks, McDonald's, many in past videos, how they say Target has horrible earnings. Walmart's talking about lower consumer. So the economy is not bad. So the economy will eventually break. The question is the economy going to look strong and inflation going to be low in 2 or 3 months? And then shortly after the economy will break, or is it going to stoke inflation that will force the Fed to act, bring up gold? So anyway, I still think gold's going to go up somewhere between 26 to 2,900, but it will be questioned when the Fed cuts rates, be by how much, and that depends on the data, depends on everything else. And anyway, that's all I have to say. If you like this video, hit that like button, subscribe if you haven't, and I will see you next video.